What a week it has been, and it's only Monday. What a crazy week it has already been. From what we saw in Asia to what we saw off the lows, what we saw going on under the hood. We're going to talk about it all. We're going to talk about the market as well as the quarter that just was. March wrapped up. The first quarter of 2025 wrapped up. It is flying by, and we're going to talk about it, what it means for the market, and where do stocks go next. We're also going to talk about OpenAI. They have some big news. Big money is flowing in the equity space. We're going to talk about Donald Trump, tariffs, and its impact on the market, as well as some price hikes we're seeing from a couple of companies. And then we're also going to look at Newsmax, their latest IPO to hit the block. But ladies and gentlemen, if you are new here, welcome to FinFluential Media. If you could please go ahead, subscribe. You help me reach more people. It really helps me out. Hit that like button, hit all the buttons. Let's dive in. A quick overview of the market. There was very few sectors in the red today. Software, IT services led by NVIDIA. Then we had the auto manufacturers took a bit of a dump, and then mineral resources. Other than that, we saw very green trade in the overall market here today on the back of what was sort of a rebound on Friday, as well as the market saying, hey, a lot of this stuff is priced in as April 2nd Liberation Day comes through. So we did see stuff like NVIDIA fall. NVIDIA was down 0.74%, but we saw growth staples, financials all do really well. We saw a little bit of the higher beta stocks take it on the chin as well, particularly as it pertains to the IT space, those higher valuations. And then you look at Europe stocks, InPost was down 1.89%. So Europe took it a little bit on the chin today. Now, the quarter officially wrapped up, and the S&P 500 is on track for its worst quarter compared to the rest of the world since 1980, guys. It was a pretty shocking quarter. Outside of the US, you generated extreme alpha. You're looking at very close to 12 percentage points of alpha. So, for example, the S&P 500 is down 4%. Europe is actually up 8% year to date. The difference there is 12 percentage points of alpha. However, the market momentum we're seeing is not stopping deal making going on. OpenAI officially closed today a $40 billion funding round. Yes, with a B, but billion. The largest private tech deal on record. The deal values OpenAI at $300 billion, including the new capital. Guys, this is insane. This actually might be a $1 trillion company in the next couple of years if they keep innovating and keep growing. There's been a plethora of chatter with regards to OpenAI's image generation and video generation, and I think it's only going to get better and more efficient. The street recognized that, and that is why we're seeing these types of numbers. And these deals are probably only going to get bigger if the AI trade continues on the trend it is. But that's all going to be dependent on Donald Trump. Now, he came out and said he is considering ways to serve a third term as a US president. In my personal opinion, I think he needs to back off from the stance, but I get it. He's trying to change the news cycle from Signalgate, etc. It happens, but this would be unconstitutional. It's never happened before. If it could be done, it would have been done already. It hasn't, and so I don't expect that to happen. But I think it's just more of a news ploy to divert attention to somewhere else. We all know Donald Trump is a master of attention and diversion. Now, on Trump market news, Donald Trump's aides say tariffs will raise $6 trillion, which would be the largest tax hike in US history. Now, not to American citizens from other countries into America. It would be a tax hike on them. $6 trillion, that is a lot. I believe this is over 10 years, and they are looking at getting about $600 billion in tariffs this year. About $100 billion will come from autos. I don't know how or where they're getting these numbers from. However, we're looking at an effective tariff rate of about 9 percentage points for the US leading up into the end of the year. Absolutely insane. But this is the type of stuff the US needs if it wants to calm that budget deficit, if it wants to close that budget deficit. Now, on the back of tariffs, S&P 500 companies citing a negative EPS guidance. 68 of the 500 companies had negative EPS guidance. So, there's definitely concern under the hood. And we had a car maker, Ferrari, a stock I've been looking at a lot. They're going to be increasing their prices. I mean, they're looking at about a 10% price hike across the board. You're looking at something like the F80, a $3.5 million car. You're going to see a price hike of about $350,000. That's going to put it in the $3.8 to $3.9 million range. And I think you're going to see very much the same when it comes to the auto manufacturers. Excluding Ferrari, all auto manufacturers operate like 5 to 7% margins. A 25% tariff would crush margins, maybe even crush the business. They're going to need to raise prices. They're going to increase prices. And this is why I say the used car market is going to go ballistic if these tariffs stick and prices do rise like we're seeing with Ferrari models. But all in due course, and we're taking it one day at a time. The latest buzz on the street today was Newsmax. Its IPO was insane. It IPO'd at $10 a share. It opened up at $14 a share and rallied all the way to $83 a share. It caused multiple trading halts. It literally was a gap up and go, up 700% on the day, down a little bit here in the after hours, but an insane rally we'll see. Now, let's talk about it. Is Newsmax a buy? Should you add it to your portfolio? Let's go ahead and have a look. Now, looking at Newsmax, guys, like I said, up 700%. So this is what Newsmax do. They run this TV network. They have shows on the TV. They have social media pages, websites as well. They lean more conservative, so there'd be more competition towards stuff like Fox News, but also inside the news space as a whole. So through its subsidiaries, Newsmax operates a television broadcaster and multi-platform content publisher. It operates in two segments, broadcasting and digital. The company produces and licenses news, business news, and lifestyle content, comprising Newsmax and Newsmax 2 that offer 24/7 television, news, and informational programming. It also provides online advertising, including online display, email advertising, and other placements, print advertising subscriptions. I'm assuming this is the high margin part of the business, and this is sort of like the lead generation that they use into the high margin part of their business, the advertising online, and obviously they'd advertise on these broadcasts as well. It's very similar to what you see with CNBC, maybe without the actual subscription service like Max Plus. But yeah, it's just a typical legacy media news company that has its digital broadcasting segment. Its advertising segment is online on all forms. It broadcasts 24/7 a day. And let's have a look at its financials. So the company did 155 million in revenue last year. And then if we just go down to the margins, you can see that they are negative. So 46% gross margin. Margins expanding, but you can see negative margins right here, negative 40% operating margin, negative 41% profit margin, and a negative 3% free cash flow margin. Maybe we'll turn that around. We don't necessarily have estimates just yet for this company. So yeah, not looking too good. You could see here selling, general, and admin. So they spend a lot on SG&A, 131 of the 155 million, and that doubled year over year. But I'm guessing that has to do with all of the IPO costs that come with that. I'm going to go ahead and assume, yeah, so a ton of operating expenses, a ton of cost of revenue. Of course, they're going to bleed money, but they were founded in 1998 and they're still bleeding money. So I'm assuming their balance sheet is not looking that great. Let's have a look right here. If we go to long-term debt, they have only $10 million. That's very, very interesting. And how much cash do they have on hand? 6.5 million. Plus short-term investments, 7 million. So not a bad balance sheet. So I don't think they're going to have solvency issues at all. And then looking at the cash flow statement, do they issue a lot of stock-based compensation? That's one thing we need to look at. Where are we? It doesn't even have it on here yet. So yeah, so negative 58 in net income, and then we subtract depreciation, amortization, the whole 9 yards. Add capital expenditures. Yep, and so you have negative 5 million in free cash flow, negative 4.75 million last year, negative 13.2 million the year before. So definitely not a company that fundamentals don't look too great. Maybe they can turn it around, but yeah, you can see the buzz on the street for Newsmax up 700%. Shorts are holding the bag and longs are sitting very, very pretty. Now let's go ahead on Grok and look at the latest 10K, if there's anything here that's worth noting. Now, they access over 100 million US homes through major cable, satellite, and OTT streaming platforms. That's very, very interesting. That's a wide reach. Corporate reorganization and public listing. Okay, diversified business segments. So it operates in broadcasting and digital, each with synergetic. Yeah, so they work with each other. So that is the good stuff. So the bad, historical losses and profitability concerns. So they did 200 million private equity placement. Yeah, so that's a big bet right there. So most of their revenue is derived from advertising revenue, it seems. Yeah, they're in a very highly political and competitive industry. No dividends planned. They're not buying back shares. They're probably going to issue a whole bunch of shares. And this is the ugly. Material weakness in internal controls. The company has identified material weakness in our internal controls over financial reporting. Failure to remediate these could undermine the accuracy of financial reporting, potentially leading to restatements or loss of investor confidence. I think once the auditing process goes through, they should be all right. Now, Now, speculative investment risk, that Newsmax Securities is highly speculative, so they put that themselves in their 10K. They are subject to cybersecurity risk. Concentration of ownership and control. This isn't actually necessarily a bad thing, especially if the owner owns it, but it does look like they have a dual class share structure. That's something you definitely don't want to see and something you don't like. And then you have legal and regulatory exposure. Yeah, it does face a lot of litigation risk. So yeah, there you go. All in all, I probably wouldn't invest in this right now. If I was going to, I would need to see more profitability. But even so, I think if you're going to get into something like news and streaming, I'd probably look for something like CNBC or maybe even Netflix. I'd rather get exposure to the highest quality component of the market rather than like a new listing which is really untested in this market and hasn't performed very well historically speaking compared to something like Netflix. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.